Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 2nd, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. This way, more people will see this video and might benefit from it. So please, especially the likes, don't forget to hit the like button. Today we'll of course talk about stocks as they again lose ground before the long weekend in the United States. High-yield bonds are leading the stocks lower. We'll give a trade example of stock called XPeng with over 46% gain for the subscribers. And the dollar seems just unstoppable with yet another high. This is weighing on various commodities, especially gold and oil currently. And Bitcoin is nearing really like a point of no return and could just completely collapse. If you're a subscriber, then stay tuned. We'll have quite a bit of stocks to cover. You can see we're covering large cap stocks and ETFs, and also separately we're going to cover some of the speculative stocks, for example, Blue Apron, Bed Bath & Beyond, CrowdStrike, Plug Power, Uber and VMware, etc., especially, and some other stocks like Amazon, Ross, Tesla, and Visa. So stay tuned for the special separate videos. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com, click on sign up and sign up for one of the products. I have two products, trading indicators and newsletters, and two packages that contain them. So I'm going to explain what these trading indicators are. So on this chart you can see four lines. There's green, blue, red, and yellow horizontal lines. These are my proprietary trading indicators, and I use them basically to trade pretty much any security. The way I use them is for stocks. So for stocks, S&P 500 is a stock or a stock index. The way I use it is as follows. If it's a stock and we're trading on daily, weekly, or higher charts, so daily meaning, you can see this 1 day. Each candlestick, each of these green or red candlestick looking thingies are 1 day's worth of activity. And the way to trade it is if a stock or when a stock closes below the yellow line, we're in a bear market. If a stock or when a stock closes above the blue line, we're in a bull market. So notice that I'm giving this benefit of a doubt for stocks to the bulls, because stocks do have a tendency of going up. So I'm giving benefit of the doubt to the bulls once again. So on this chart you can see that S&P 500 on daily charts closed below this yellow support resistance line on April 29th, 2022 of this year. This to me means we entered a bear market. From then on, our thinking changed. Whereas before, for example, back from 2020, we were closed above the blue line and we were buying the dips. So anytime we pulled back to the blue line, we would buy it. It was very little opportunity for this particular ETF, but for example, there was an opportunity here in early January, perhaps as late as March, but then that's about it. We unraveled and we made a low and we closed below this yellow line in April. So that means we changed our thinking and we are now thinking about selling or selling short if you're an aggressive trader. Now when you sell, that means you're just exiting your long-term positions. When you're selling short, you're actually betting that the security will continue going down. So in this case, for example, we had a close below the yield support resistance line in April, a new low and a bounce towards this red line. So this is what we do. We wait for a bounce towards this red support resistance line and we sell short there. So this was several opportunities here in June. Now we had another low here back in mid-June, and then we had a very large rally. Huge, tremendous. So this is what's called a bear market rally. Because we're in a bear market, we're rallying. We can also say that this is a counter trend rally. The trend is down, but the rally is up. So we were waiting and doing nothing from June. We literally were sitting on our hands from June till August, almost, exactly 2 months. And then finally we got our signals. Our signal here was actually quite recent. On August 26th, we finally closed below this red support resistance line, and this was our signal to start selling short again. So we're again started to sell short, where all of this alerts, notice here, all of this various tons of alerts, they're on the short side. Okay, so we're not looking to buy, we're looking to sell. We're looking to sell short. So right this instant, the market's just closed for the long weekend. We're gonna have to wait until Tuesday, well, Monday evening for the markets to open, but Tuesday morning is when we're gonna finally have a normal session. But as we see, the signal was on 26th of August, and we can actually look on the weekly chart as well. So on the weekly chart, meaning that each candlestick, where I'm hovering, it says W, 1 week. This is each candlesticks, each one of these red or green funny looking things is 1 week's worth of activity from Monday till Friday. Well, in case of S&P 500 futures, which it is, notice the symbol for TradingView, ES1 exclamation point, or continuous futures. Now all of this is available for TradingView.com. All you need to do is register on my site. So on the weekly chart, the alert, or rather the signal was the same thing on last week. There's the short signal, and we had a nice follow through this week. Notice that on the weekly chart, you need to change the settings to 52. See where I'm hovering, 52. How do I change the settings? You click on this wheel settings icon and change it to 52. So this is again continuing, to the downside, and it's very much possible that we will take out this low from 13th of June. I mean, this is a really pretty bad candlestick for the week. Notice that I'm going to zoom in a little bit more, but we tried to rally. We almost got to the red line, and then we just sold off, and we continued selling off almost until the very close. Just at the literal last quarter of an hour or so, we rallied a little bit, but overall it's quite a bearish candlestick. So most likely, I mean, the direction is clearly down, so these lows from June, I doubt they will hold. So we'll just need to wait and see what happens, but most likely the direction is down. So we are thinking about selling short. We are selling short indeed. Here's Dow Jones, same general principle. Notice that Dow Jones, same thing as S&P, entered bear market in April, had a little bit more opportunities to sell short. Huge rally again from the lows in June. Notice where it topped out, 16th of August. I'm not making it up. It topped out exactly at the blue support resistance line. It's pretty wild, right? So we had two touches of the blue line. I mean, these lines are calculated. They're not, I'm not drawing them in. And then we bounced off. So this is clear case of resistance. This is how resistance looks. We rolled over, closed. There's a big bearish candle here on 26th of August, and then we're back in bear market. So again, bear markets are characterized by lower lows and lower highs. So most likely this low from June will not hold. Nasdaq slightly different, weaker than S&P. So Nasdaq entered bear market right there on March 8th this year, had a rally into March, and then had actually a nice, really good signal here in April. Huge collapse in our favor. So if you shorted it here in April, I mean, it's huge move. And then again, big bear market rally for Nasdaq. Where did it top out? Topped out around the red line. Had very nice short signals. Had two opportunities to get in, and actually we're now down to this yellow line, so we're pretty close to the lows from June, and we could easily again take them out. But because of the correlations between the various stock indexes, it does make sense that all of them are sort of following the same direction. So Nasdaq weaker than S&P, weaker than Dow Jones, and sort of leading the market lower. Also Russell 2000, not as weak as Nasdaq. We already, if you notice that for Nasdaq we already touched this yellow support resistance line. For Russell we're almost there, we haven't yet touched, but Russell actually entered the bear market even earlier. I already showed this in January of this year, and I had several excellent opportunities to sell short. One here in April was just tremendous. And then again, bear market rally and sell short opportunities. So recently, subscribers are already opening positions on the short side. And this is actually, from, for example, this opportunity to sell short on 26th of August, this is already a target. So this is, already, you're not going to lose money. You just need to move your stop to entry at this point. So overall, stocks are in the downtrend. Will this low hold from June? I doubt it. I seriously don't think it's going to hold. When will it be broken? Nobody really knows. I mean, this is technically somewhat oversold to the downside. So markets are somewhat oversold. So bounce is possible, but again, this bounce is an opportunity to sell short, to get short again. So I would consider selling short when or if we bounce towards the red support resistance lines. If you need the lines, just send me a message. Okay, now we're looking at the junk debt, high yield bonds. So as always, I wanted to show you that the reason I'm not, I keep talking about junk debt is because of the high degree of correlation between S&P 500 and high yield bonds. So this is high yield bonds, and here on the bottom part here is the what do you call it, correlation to the S&P 500. So notice that correlation to the S&P 500 is very high. That means that we can think of high yield bonds as an extension of stock market. Indeed, what happened this year, this is a weekly chart, but we can look at it as well. So there's the entry of the junk debt into the bear market on 18th of January. Coincidentally, this was the date when the Russell 2000 entered the bear market. Notice here, 18th of January. So junk debt was a, I don't know, they keep calling this a canary in the coal mine. Notice how it completely unraveled. Just very strong move to the downside. So on daily charts, this was a very clear signal for us right there on 11th of August, when the junk debt also rallied together from the lows in June, and it touched this red support resistance line, and it proved to be like very strong resistance, and notice it rolled right over. So right now we are actually already retesting the June lows. Yesterday, on 1st of September, we came super close to June lows, and now we're basically retesting those lows. Again, I don't think these lows will hold. So this would mean that if this lows don't hold, and in fact junk debt will be the first one through the lows, then we can basically blindly short the indexes, and most likely we'll get like a waterfall kind of event for the various indexes. So I would be on the lookout for junk debt, especially see where that takes us. Alternative scenario is also possible. We hold here and bounce, but once again the direction is down. So even if we bounce, we need to look for opportunity to sell short. So if or when we bounce, then we need to look for another similar pattern to what we had here in August, when the price comes up above the red support resistance lines and then closes below it. That's all I need to know. That's a short signal. I don't really need to know anything about fundamentals at all. So I wanted to show, highlight, kind of like boast a little bit, the subscribers. Somebody actually took this trade. They sent me a message. So this is a huge trade. This is XPeng, symbol XPEV. So it sounds to me like electrical vehicle maker. Again, I don't really know anything about what the company does. I don't really care much. I mean, to a degree I care, because excuse me, for example, if it's a gold related stocks, then and I do care, I need to know, because if it's a gold related stock, then I need to look for what gold is doing. But by and large, if it's just like a stock that does something, I don't really care what they do. What I really need to know is one thing: is it in a bull market or a bear market? And how to tell if the stock is in a bull or a bear market? So very easy. If a stock has closed above this blue line, blue support resistance line, as for example it did here in November of last year, it is in a bull market. When or if it closes below this yellow line, as it did here on 7th of March, it becomes in the bear market. So at this point we need to think the opposite. We need to think, okay, so when will it bounce towards this red line? We will sell it short there. So what happened? It bounced towards this red line right there. We actually had a high or even a close above it. Eventually rolled over on 1st of July. This is when an alert was sent to the subscribers. Notice what happened afterwards. It completely collapsed. This was 46+% loss for the company, but since we're buying puts or placing bearish bets, for us this was a very big gain. So congratulations if you opened a short position in this company XPeng. This is switching gears. Now we're looking at dollar currency index, US dollar currency index on TradingView, symbol DXY. So dollar seems completely unstoppable. I'm going to look on weekly charts just to show you how it looks like on weekly charts. Once again, weekly charts just means that each of the candlesticks is 1 week's worth of activity, and the indicators need to be switched to a weekly mode, which is 52 length. Okay, here on DXY on daily chart where I'm hovering, the length is 250. You see. But if we just need to zoom out, because if I zoom out on daily chart, it's going to get like very difficult to read. So there is the breakout on daily chart way in July of last year. It's just very difficult to read, but if we look on weekly chart, it's a little bit more clear. So there's a breakout. Again, I don't know anything about anything. All I need to know is where the price is in relationship to my lines. And so the price closed above this blue line on 13th of July, week of 13th of July. That's all really what we needed to know. We had several opportunities to buy it. So dollar broke out back then, and it hasn't really stopped. By extension, we can look at like a USD JPY, for example. There's USD JPY with an enormous run. I mean, again, these are actual alerts back in March of last year, in April of last year. So if you bought this currency pair and you really did nothing for this long, that is a 31% gain. So you can see that this is an enormous gain. It's like 3,000 pips or something. This is a long-term trade, obviously, so you need quite a bit of capital to trade it this way, but nevertheless, it is possible to do. So why do I care about the dollar? Because we also trade things like gold and oil. So when dollar goes up, it punishes commodities. So let's look at gold. This is XAU divided by USD. So like I said, if the dollar goes up, notice this XAU divided by USD. So the lower part of this equation is pulling this currency pair lower. Now, until relatively recently, until until March, this up move for the dollar was relatively muted on gold, but then it became to matter. So notice that gold rolled over. There's the entry into bear market on 9th of May. This is a weekly chart, 9th of May. We shorted it right there. I personally shorted it as well. Here on 27th of June, we can look on a daily chart. I'll show you what I mean. There's the actual, notice this downward facing arrows, actual alerts. I shorted gold right there on 30th of June. Had a pretty nice run. I got out like here around 13th of July. Looking back now, I probably, it's difficult because of the really huge counter trend rally. Technically speaking, my stop should have been at the red line, and I would not have been stopped out. So we're now again at new lows. So if you held on and didn't get stopped out, I think we'll break those lows from 21st of July and most likely continue lower. So notice on the weekly chart, we're again retesting the lows from March of 2021, August 2021, and then we made another one from the July of these lows. So we're again very close to that level, and I think we will again retest that level, and I don't think it will hold. So theoretically speaking, we can see how much of a move this was. So this was like 18% move. We could try to do an estimate. So this is not unreasonable estimate. I think we can easily move towards about 1300 for gold. So that's gonna be somewhere in the vicinity. Yeah, it actually makes a lot of sense. Somewhere in the vicinity of February 2019 highs. So this is deflation, and this is not an inflation. It's what it looks like is the Federal Reserve is indeed going to be successful in fighting inflation. However, at the same time, they will create a deflationary spiral whereby commodities lose value. Stock market will most likely continue to lose value. And then, one thing leads to another. Companies lose value. They fire workers. Workers cannot afford things like rent and food, and then everybody downsizes. So it's a deflationary spiral. So this is my kind of projection into the future. I think that many of the people, big names in trading also are predicting pretty dire times. I'm purely basing my prediction on technical picture, and looking at S&P 500, the lows from June must hold, or else if they don't hold, then will most likely just collapse. How low for S&P? Well, again, we can do a projection, but I think easily into at least 3,000, possibly lower. So we're right now at 3,800. So that's not unreasonable to here, 2,600. Maybe even lower to 2000 low. I think at that point Federal Reserve chairman would say, okay, I think we need to lower the interest rates, and maybe at that point we'll stop falling. All right, and then finally I wanted to wrap things up with another dire prediction for briefly on oil. So oil, actually shorted myself. So why did I do that? Oil is closing below this my red support resistance line. Notice several times it tried to collapse below it, but it just didn't, and I think this time is the charm. The reason being is because it did so on the weekly chart. So let me show it to you on the weekly chart. There's the weekly chart, and there is that close below the the red support resistance line today, right there. Today is Friday. So notice 1, 2, 3, 4 weeks in a row we touched this red line. We couldn't close below it. This red line is at 87.96. Today we closed below it at 87.08. This is bad news for oil, bad news for Russia, because they are still exporting oil. Don't get me started on that war. But oil did indeed go negative, so we do have we had a negative oil back during the pandemic. So yes, there is precedence of when things do go negative. Will it happen this time? I don't know. I mean, it's possible. At this point, I'm predicting the move to at least 73. This is my yellow line right there. However, it also could continue lower, but let's do one step at a time. I think easily we can see a 73 oil, possibly lower. So another important level to watch is this low from November of 2021 at around 62 or so. But I just don't see it going higher. I see it going lower. Again, this probably has to do with dollar, and also if you like the supply and demand kind of thing, yes, indeed there are more supply now, because Saudi Arabia is pumping more, and everybody is just pumping more to stick it to the Russians. All right, and finally I want to wrap things up with Bitcoin. So I am ultra bearish on Bitcoin. We had multiple beautiful opportunities to sell Bitcoin short. Again, I'm not perma bear or perma bull, but in this case, see, we were buying it way back in October of last year, but now we're selling it, we're shorting it. So we had multiple opportunities. I'm gonna zoom in on Bitcoin to sell it short. We sold it short at the red line. It just collapsed right afterwards. The latest opportunity was enormous for 61%. Good for 61% gain. We shorted at 47,000. It went as low as 18. I think it will continue lower. We're now again approaching this level from June. If it doesn't hold, look out below at least 10,000, possibly lower, possibly negative. So I am really quite bearish on on Bitcoin. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up for one of the products. I have two products and two packages. I have trading indicators, which I just showed to you. So this green, blue, red, and yellow line. Basically, they will simplify your trading experience dramatically, and you can really just relax about things like fundamentals and concentrate on price and where to buy, where to sell, at what price level to buy, at what price level to sell. So this is the trading indicators. The newsletters are also available. So again, I send out daily alerts about various stocks that we trade. Notice lots of different stocks that we trade. Some of them are large caps and ETFs. Some of them more speculative ones, like for example Bed Bath & Beyond just recently collapsed and we are short. So that's newsletters. And I think the best deal is to get both trading indicators and newsletters at $59.95 per month. I think it's a great deal, especially considering inflation it's possible. Things are getting more expensive. I think this price is really good. If you need one-on-one sessions, you can also sign up for VIP access at $259 per month. I think it's also a great deal. You get to sit with me on Zoom for 60 minutes per month, once per month, and then I can literally show you everything with a screen share. Right, that's it for this week's recap. Again, if you have any questions, please let me know. Thank you for watching and have another great trading week. Bye-bye.